We've raised $100 million in the last year. And we've spent a lot of that money on the mine site doing the projects that were needed to get this thing ready for restart. CapEx is going to be pretty small because our predecessor company spent $350 million, and we've already spent a big chunk of money in the last year. There's just not that much money left to spend. So our CapEx is going to be very small, which by the nature of how it's calculated, the CapEx is in the denominator, should mean that the rate of return should look very nice for this operation.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. We are sitting down for a sponsor update with Gwen Preston, VP Investor Relations of West Red Lake Gold Mines. And, well, Gwen, I was talking to you earlier, pre-call here, like the amount of news flow that West Red Lake has, it's kind of the envy of the industry here. And it's not just fluff. We're talking consistently impressive drill results here. So I know you're the source here, or the major source. What's down the pike here?
Absolutely. Yeah, we are blessed for sure to be able to put out so much news. But of course, it's the nature of the beast. The beast being that we're pushing this asset as quickly as we possibly can towards restart. And so that requires so many layers of activity at the site. And so those all generate news, right? On the drilling front, we're really pleased I want to say pleased in two ways. We're really pleased that the market seems to be really noticing our drill results, which often doesn't happen when it's just infill drilling. But this is really important infill drilling. Infill drilling always is, I should say, but this is infill drilling to define, mineable inventory, to sort of literally create our stope book, which is like every single spot in the mine that we are going to extract when we restart this mine next year for the first several years of operation. And so you got to do really tight space drilling and have confidence. And the confidence piece is what really matters there, because of course the history of this asset means that some people have questions about the resource, and our team has, through all the work they've done, interpreting the geology and refining that resource model, the internal resource model that we have, the drill hits are really consistent and they're really phenomenal. I mean, the last set of results that we had, some from the main Austin zone, included some uber high grade stuff, 106 grams per ton gold over a meter. Also some hits from over at the McVeigh zone, which is like the near surface, geologically more complicated zone. Took our time before going there to really understand where we wanted to target, and have been getting some really strong results from there too. Also, ironically, the same number, 107 grams per ton gold over a 1 meter hit over at the McVeigh zone. So, I mean, we're really, really pleased with how the geologic team is able to produce these results, and with the fact that the market is acknowledging, wow, you guys are churning out high-grade hits consistently. Your hits are happening within the block model that is your resource. So that's really increasing confidence in this deposit as we push this thing towards restart next year.
And so obviously there's going to be a lot of news coming, and you're drilling consistently, regularly, so the results are going to be coming out, I don't want to say at a regular interval, but regularly.
Yeah, I mean, I think it's reasonable to expect infill drill results every couple weeks, like every 3 weeks, and sort of forevermore. You just don't stop infill drilling at a project like this, right? That's the nature of a high-grade gold deposit. You're always going to be hammering your resource with infill holes as you continue to create that stope book for, the months and years ahead. But there's not only going to be drill results, there's also a whole bunch of other news in the pipeline for sure, because like you said, as you push a mine towards restart, there's lots of layers of work going on. So there's lots of projects underway at the mine site. We're doing a tailings dam lift, which will give us 10 years of mine life at 800 tons per day throughput. We're doing a connection drift to attach the two different sides of the mine. That's a $10 million capital project. We're building a camp. We're building a mine dry. We're doing a lot of we're installing a primary crusher. We've added evaporator fans to increase our ability to dewater the mine. We're doing the work that, after a year of really deeply assessing the amazing infrastructure that existed at this operation, we really spent our time to assess what was fantastic about that and what was still needed. So the capital projects that we're doing are addressing the needs. Infill drilling for sure. And those other things that I mentioned, those are all about creating an efficient mine. And efficiency is the bottom line, cost-wise in mining. So we're doing all these capital projects so that when we get to that restart decision, when we turn this thing back on in 2025, we give ourselves really good odds of success for Madsen to be the mine that it has the potential to be.
West Red Lake's kind of unique in the sector because you're exploring, but the bulk of the exploration, or a lot of it's already been done, and you're going to be producing. So there's not a lot of, I would call, choice companies in your position.
Absolutely. I mean, I think you and I chatted about this for a moment just before the call, but we had this huge piece of news in the mining sector in the last little while here, right? Osisko Mining being taken out for over $2 billion. And that was a deal to take out a near production asset, right? A gold project that can be put into production in this cycle. And so that sparked our attention here in the office for sure. And I got one or two banks to send me their lists of takeouts of M&A activity, project or company level, in the gold space for development stage assets. And I added it up. In 2022, it was $1.4 billion. In 2023, it was $1.7 billion. And in 2024, we're already at $2.4 billion in takeouts of development stage assets in the gold space. So it's only 3 years, but it's a pretty significant trend, and it makes sense, right? We had this huge bear market that stopped a lot of projects in their tracks. So there aren't that many projects that kept progressing and moving towards the ability to start producing start producing gold in this cycle. So how many operations are there that are going to start producing gold in 2025? I think the list is very, very short. And so I have no idea if another company is going to come and get interested in buying the Madsen mine. But if investors are looking for leverage in a rising gold market, it's long been understood that new production creates new value. I mean, new production or new output in any market, in any industry, should create new value for that company, right? And in the gold market, that means companies that are significantly increasing their gold ounce production. And we're going from zero. And ideally, hopefully we are going to, this 60,000 ounce per year. That's our general target for production for next year. That's a big change. And it has the potential to engender a significant re-rate. We'll see how the market reacts to that. But that's certainly the thesis here. And I think the rarity of a company putting a new gold mine into production, that's what I really love about the opportunity in West Red Lake Gold right now.
And it's so rare, especially in these days with the lead times to building mines. And then, like you said, the state of the sector, which didn't produce a lot of companies in your position. And more importantly, if somebody does come knocking, they already know that you're prepared to actually bring this mine online. So your ability to leverage that position, the optionality, is something I think a lot of people don't really appreciate.
Yeah, and I agree that there's a bit of a lack of understanding of exactly what you just said. When's it going to happen? How soon is it going to happen? And that's been part of the story. We bought this asset only just over a year ago, and we've pushed it forward so quickly that we haven't been able to produce an official compliant mine plan that the regulators let us put out and talk about. It just takes a long time for the independent, people to produce those studies, and they can only start after we've done a certain amount of infill drilling, and so on and so on. So the exciting thing, though, is that study is now coming out. In the next few months, we will issue that pre-feasibility study that lays out in very clear detail what this mine is going to look like, how much its operation, how much each ounce is going to cost to produce, and therefore, what the value of this asset should be if we turn it back on next year. And I'm optimistic that study shining light on the numbers, making solid what has been a bit nebulous, should help the market understand the value opportunity in West Red Lake Gold. So that's coming up in the next few months. So it's going to be a really busy couple of months for news flow. And I think in what could well be a pretty phenomenal gold market. I mean, it's a phenomenal gold market right now, and let's see what happens as we move through the seasonally strong fall towards the U.S. election. I mean, there's lots, and rate cuts. There's lots of interesting levers that look like they're ready to be pulled through the fall.
So you told us the PFS is coming. I realized you can't tell us too much. Can you tell us something to whet our appetites here?
For sure. So, I mean, the scale of that operation that we are designing is not dramatically different from the scale of the operation that our predecessor put in. So, Pure Gold targeted 70,000 ounces of gold annually. We'll probably be a little bit below that. We're taking a more conservative approach to pulling ore out from underground. So, like I said, the 60,000 ounces of gold annual production is certainly our goal. And I'm not going to put numbers on this, but I will say that we've raised $100 million in the last year, and we've spent a lot of that money on the mine site doing the projects that were needed to get this thing ready for restart. So what is it that people look at in a PFS? They look at a lot of things, but the big numbers that stand out are NPV. So what's the net present value of the asset? And then what's the IRR? What's the internal rate of return? Well, the internal and what's the CapEx? What's it going to cost to put this thing into production? Well, our CapEx is going to be very modest. In the grand scheme of building a gold mine, our CapEx is going to be pretty small because our predecessor company spent $350 million, and we've already spent a big chunk of money in the last year. There's just not that much money left to spend. So our CapEx is going to be very small, which by the nature of how it's calculated, the CapEx is in the denominator, should mean that the rate of return should look very nice for this operation. So that's another reason why I think the study could attract some nice market attention, bring some eyes to this story for the reality of this mine that we're pushing to restart.
All right. So CapEx, you raised $100 million. Any idea how much more is going to be necessary? Indicate not much, but I assume there's always things you didn't count on.
For sure. And I mean, it's not so much things we didn't count on so much as the history of this asset has been one of undercapitalization. And the last thing that we want to do is make the same mistake for the third time. And so over-financing is our goal for when we access the final piece of capital to get this thing back into production. We want to make sure that we have enough capital to carry us through commissioning and into commercial production, and we're not stressed for cash because, not being able to do to fix the things that are causing problems is how a mine starts to stumble, right? So are we going to access something in the range of $50 million over the next little while to make sure that we can finish our projects and carry us through to production very comfortably? Yep, that's the goal. So we're working on those. We're doing our best to do that without further dilution. And when you have a project that is so close to production, for those who understand what it is that we're doing, other options become possible. There's other ways of accessing capital. So we're working on that, and we look forward to near the time of that pre-feasibility study, letting everyone know how we plan on accessing that last piece of capital to get this thing to our goal of restart in 2025.
Yeah, in the second half. And hey, if you overperform, maybe we'll have a surprise there, huh?
I mean, the two things I said, the one constant in the history of this asset has been undercapitalization. I would say perhaps overpromising or short timelines, being in a rush, has also been present in the project's history. So we do not want to repeat that. So we are saying the second half of 2025, we're doing everything in our power to see if we can make it happen sooner. And if we can over-deliver on our promise, then we will happily do so. But let's get all the work done. The real thing that needs to happen to get a mine into production is all the work, all the planning, all the operational readiness, all the drilling, all the engineering. There's all the procurement, the budgeting. There's so much, and we're working through it just as quickly as we can.
Yeah, very complex operation. It's one thing you're doing the mine yourself. So you got surprises. But then when you take over somebody else's mess and then you have to make sense of it, there's a lot of challenges there as well. And it sounds like those are in the past. And now we can look forward to the good times here. So I suggest everybody go to westredlakegold.com, sign up for notifications, get the latest drill results and all the latest developments, and the ticker symbols in the U.S., WRLGF, and of course in Canada, WRLG. Gwen, always a pleasure. Thanks so much.
Thanks so much for having me, Kerry. I love it.
The Financial Survival Network.